Hi, welcome to my channel. This is Ma'am Gapi once again, and before we proceed, if you are new to my channel, please do click the subscribe button, the notification bell, the like, and the share. So our topic is Introduction to Accounting. They say that accounting is the language of business, and anyone who is knowledgeable should be able to understand the numbers presented in the accounting reports. Accountants of different countries all over the world should have the same interpretation of the financial information, and this is possible because of internationally accepted accounting standards globally accepted. So what are the benefits of global accounting standard? Benefits of global accounting standards. First, domestic capital markets increase credibility to foreign capital providers and potential foreign merger partners. Second, comparability of financial data across borders. Third, greater transparency. And fourth, greater understandability because there is a common financial language. Ease of regulation of securities markets, regulatory acceptability of financial information provided by market participants, continuation of local implementation guidance for local circumstances, portability of knowledge and education across national boundaries, and consistency with the concept of a single global professional credentials. However, in spite and despite of the international financial accounting standard implementation, there could still be differences in the practice of accounting, and it could be because of the following factors. Political and economic ties with other countries, status of the accounting profession, existence of a conceptual framework because of language, terminologies, valuation, currency, and recognition principles used, quality of accounting education, and the type of the reporting regime. Next is the type of business entity, type of capital market, type of legal system, level of enforcement, and the level of inflation. Who are the users of accounting information? We could classify them as the macro user and the micro user. In macro-user-oriented systems, government, particularly tax and economic planning agencies, are the principal users of accounting reports. In micro-user-oriented system, a diverse set of capital providers such as investors and learners is perceived to be the most important user group of accounting reports. The complexity of conducting international business operations across national borders, each with a different set of business operations across national borders, each with a different set of business regulations, and often different accounting methods, presents an intimidating challenge for accountants and the professional bodies that establish accounting and auditing rules. With the globalization of business and diverse accounting practice, efforts have been made to harmonize accounting standards across countries. This has resulted in the creation of International Accounting Standards Committee or the IASC in 1973. The International Accounting Standards Board IASB succeeded the IASB. The main objective of the IASB is to develop a uniform set of high-quality, understandable, and enforceable global accounting standards. Its purpose is to achieve higher degree of compatibility and transparency of financial reporting to help the world's capital markets and other users make economic decisions. Currently, the International Financial Reporting Standards consists of the following: the International Financial Reporting Standards, the International Accounting Standards, and the interpretation of the IFRS and the IAS. The Philippines decided to adopt the accounting standards issued by the IASC and the IASB with the following appropriate terms: Philippine Financial Reporting Standards or the PFRS corresponding to IFRS, Philippine Accounting Standards or the PAS corresponding to IAS, and the interpretation of the PFRS or the PAS corresponding to the interpretation of IFRS and IAS. The Philippine Institute of Public Accountants or the PICPA, the national professional body of CPAs in the Philippines, created the Accounting Standard Council as the accounting standard body in the Philippines to establish and improve accounting standards that will be generally accepted in the Philippines. Basically, the accounting standards in the Philippines called Statement of Financial Accounting Standards or the SFAS were US-based until the gradual adoption of IAS and IFRS in the Philippines starting in 1997. The decision to fully adopt the IAS was due to the following reasons: increasing globalization of businesses, recognition of IAS by the global financial institutions such as the World Bank, World Trade Organization, and Asian Development Bank, and complete support by the Philippine regulatory agencies. In 2004, the Philippine Regulation Commission or PRC created the Financial Reporting Standards Council, replacing the ASC. The FRSC was created to assist the Board of Accountancy to carry out its powers and functions provided under Republic Act number 9298, the Philippine Accountancy Act of 2004. The approved accounting standards of the FRSC are known as the Philippine Financial Reporting Standards or the PFRS and the Philippine Accounting Standards or PAS, which fully took effect on January 1, 2005. Philippine regulatory agencies. The following Philippine agencies regulate the financial reports and professional activities of certified public accountants: Bureau of Internal Revenue or the BIR, local government units or LGU, Bangko Sentral ng Pilipinas or BSP, Security and Exchange Commission or the SEC, and the Philippine Institute of Certified Public Accountants or PICPA. The BIR ensures compliance of national taxes such as the income taxes and business taxes and license requirements of all businesses. The LGU ensures payment of local business taxes and other local taxes such as community tax, real property tax, and professional tax. Bangko Sentral ng Pilipinas or BSP regulates the operations of all banks and business imports and export activities. Securities and Exchange Commission keeps an eye on the operation of all kinds of corporation, profit or non-profit. The PICPA protects the credibility of CPAs and instill ideals of professionalism, ethics, and competence among CPAs. The Philippine Institute of Certified Public Accountants protect and enhance the credibility of the CPA certificate, maintain high standards in accounting education, instill ideals of professionalism, ethics, and competence among accountants, and foster unity and harmony among its members. PICPA also functions as the policy-making body of the following accounting organizations which function as its implementing arms: the ACPAE or the Association of CPAs in Education, the ACPASI or the Association of CPAs in Commerce and Industry, the ACPAP or the Association of CPAs in Public Practice, and the GACPA or the Government Association of CPAs. The professional organization of CPAs in the field of management accounting are as follows. The PAMA or the Philippine Association of Management Accountants, established to provide its members with educational and professional activities and knowledge regarding current policies and methods in management advisory services, and the Philippine Institute of Management Accountants, implementing arm to propagate and professionalize management accounting in the Philippines and direct the Certificate in Management Accounting or the CMA program. Guys, thank you for listening. This is Ma'am Guppy, and please don't forget to subscribe if you haven't done it yet. Hit the bell icon for notifications, and please click like and share. See you in my next video.